I own Tattoo Chef. Girl, they call me the big chef around there. You never heard of it? It's like a plant-based food company. Sounds lame. Bet you know Krispy Kreme donuts? No, I'm just playing. Hello? Hello? Oh, shoot. Sorry, guys. Oh, my goodness. We have issues in the stock market we got to talk about here today. And it's a whole lot of issues nonetheless. And some things that are going on. I know you guys weren't supposed to see that conversation there, but there's a whole lot of drama out there in the stock market. A whole lot of folks looking at the market different ways. And I want to go through a ton of different stocks and talk about exactly what is going on in this video. Hope you guys enjoy this as always. And before we get into this, make sure you're subscribed to the channel. If you're not subscribed, it is absolutely free to do so. All you gotta do is go down there and hit that subscribe button and boom, there you are. You are officially subscribed. Alrighty guys, so let's start getting into this here, alright? So you're looking at Microsoft, right pretty much at an all-time high for that company now, over a $2.5 trillion market capitalization. If you look at Apple and you're thinking about buying Apple stock, you're looking at paying an all-time price for Apple. The highest pretty much the stock has ever been is right about literally right now. You're looking at Nvidia, right? Nvidia has gone through the roof. It is starting to approach $1 trillion market cap, and Nvidia is an incredible company putting up some incredible numbers, but it's another one of those stocks that if you're buying it now, you're going to have to pay an all-time high. So you have folks that are in the market looking at some of these stocks, Mr. Softy, Apple, Nvidia, whatever, some of these bigger tech stocks, right? They're looking at these and they're like, oh my gosh. I got to pay literally all-time highs for these stocks. And for the most part, most people don't want to pay an all-time high for a stock, right? You look at AMD, guess where that's at? It's at right around an all-time high, literally as we're recording this video right now, okay? If you're thinking about the banking stocks, you have a lot of stocks like JP Morgan and some others that are, what are they at? All-time highs are right around all-time highs literally right now, right? Look at Google McDougal hitting a $2 trillion market cap now for Google McDougal. That one as well is right around an all-time high. So you're looking at large caps, right? And especially a lot of big tech, and folks are looking at these stocks and they're like, man, this is like all-time highs I got to pay for every single one of these stocks. And a lot of folks are looking at that and they're like, do I really want to buy these stocks at all-time highs right now? Just not to say they can't go higher. It's just, when you're buying at an all-time high, it's never the most fun thing, right? Amazon, just like all the others, pretty much at an all-time high right now. Shopify, all-time high right now. It's like all-time high after all-time high after all-time high. Now, meanwhile, you go over to look at something like Alibaba, and this stock has been devastated, right? And let's be quite clear, if this was an American company, this would be trading at, probably a valuation similar to Amazon, around $2 trillion or maybe even higher. But it's not. It's a Chinese company, and there's a massive amount of trust issues. Folks like myself can't even buy the dang stock because we have so many trust issues with what Xi Jinping might do or might not do with Alibaba, and the fact that it's like illegal for people that outside of China to own technically tech companies. Yeah, there's a lot of weird rules and laws that doesn't make any dang sense, but it makes it so dang suspicious that we can't even buy a stock like that. So we're looking at a stock like Alibaba and we're like, it seems like the greatest deal ever for a large cap at least, right? You're looking at all these other stocks, Shopify, Amazon, Google, Apple, everything else, right? Pretty much at all-time highs. We finally have a truly great deal. This is a truly great deal. This is a steal deal for Alibaba, but a lot of us can't buy it because it's a Chinese company, and we don't know what the heck Xi Jinping's going to do next. And so we're looking at that and we're just like, so we could pay an all-time high for Amazon or an all-time high for Shopify, or we could buy Alibaba for, a dime on the dollar, but shoot, who knows if it's going to be delisted or our money goes to zero because they all of a sudden take it off the stock market. It's not out of the realm of possibility in this whole scenario, right? Folks are looking at a stock like Teladoc. And Teladoc, let's be quite clear, it still has a fairly high valuation, but it's come down massively on this stock. You're looking at a 52-week high that was over $300 for the stock. But when it comes to Teladoc, folks are looking at this and they're like, well, who's to say a lot of folks aren't going to do
tax loss harvesting, a lot of funds, a lot of individuals that are in this stock. So if you've bought Teladoc stock, you are down. And you're probably down massively, right? Most people have been buying the stock between $150 and $250, right? I mean, heck, even if you bought the stock yesterday, you're already down 3.5% roughly. And so everybody that's in the stock's pretty much down. A lot of investors are looking at this and they're like, this stock's probably going to continue to sell off for the next month because you're going to have people basically doing tax loss harvesting, going ahead selling their shares and probably buying them back at the very end of December or the beginning of January. So they're going to sell off over the course of the next month, right? So they get out of that 30-day wash sale rule. And so you have a lot of folks saying that, and they're like, why do I need to buy Teladoc today? It's probably just going lower. It's probably going under $100 is what a lot of folks are saying, right? And so, yeah, I mean, if you're talking about a 10, 20% drop from here, just based upon all this, tax-related selling that will happen over the next, let's say, month or so, I can understand why people don't want to buy it, especially if you're getting devastated by it. If we go to CathyWoodStocks.com, which tracks the top 25 ARK holdings in their main fund on a daily basis, that's CathyWoodStocks.com, we're going to see Teladoc is her second biggest holding. So clearly there's a belief in Teladoc long term from folks like Cathie Wood, as well as just a lot of investors in general. And I've looked into the company, and I got to say it's pretty darn exciting, okay? But you can't deny the fact that almost everybody is down massively on that stock. And if you put two and two together, there's a high probability that the stock will continue to probably sell off for the next month. So people are looking at Teladoc at 119 and they're like, man, I'm going to be able to pick up shares for 99 pretty soon. So you get into that sort of situation in the stock market too. This is why the stock market is just in a tough place. You're looking at all these all-time highs, and then you're looking at something like a Teladoc, and it's like, well, that's probably going to sell off a ton more, okay? If you look at something like Celsius Holdings, this one's dropped quite a bit recently, right? From 110, now it's trading at 73, but it still has a rich price to sales ratio on it, right? So this is a stock that could even be attractive to me, but it's still at a pretty darn high valuation because a lot of these stocks just got pushed to very high valuations at some point during this year. Some of them, with the Celsius case, kind of very late in the year got pushed its valuation. A lot of stocks, it was in January, February, March is when they got their valuations pushed to some sky high levels. And a lot of them have come down, so it's more attractive. But now with something like this, that's obviously a massive falling knife there, right? Speaking about falling knives, let's talk about the chef, okay? TTCF. A lot of folks look at this stock. It's a high growth play. It's an exciting play that's getting into a ton of different product categories, SKU expansion, everything we always talk about. But a lot of folks have trust issues with the management team. So a lot of folks are like, I don't really need to buy this chef right now. And especially the fact that the stock hasn't done anything, right? So a lot of people are now on the sideline looking at this stock and they're like, we'll see what happens over the next few quarters. Let's get the management's trust back. And the stock, a lot of people say the stock's probably not going to do anything because if you look at the stock chart for the past year, it hasn't done anything, right? It goes from $16 to $24 to $16 to $24 to $16. So a lot of folks have trust issues with the management. Now they want to see a few quarters before they get back involved. A lot of people sold off when the stock tanked to 15, 16. I personally know a lot of people that sold off of the stock because they're like, I don't know, man. They'll postpone the earnings and things like that. So you have those trust issues that are now built in that in order to build back trust, as with anybody in life, right, it takes time. And so you have a stock like that, and even if it's at 16, 17, 18, a lot of folks are saying, I just don't want that because I don't trust the management team right now. I want to see what happens over the next few quarters. So you have something like that, right? You look at a stock like Corsair Gaming, CRSR. This is a stock that a lot of folks just look at right now, even at $24, and like, wow, it looks pretty cheap, but there's the Eagle Tree Fund, right? And a lot of folks are like, Corsair's not going anywhere. That's how a lot of folks think, right? You got that big fund that could sell out more shares at any moment. And so they're like, why is Corsair all of a sudden going to go to $34? Like a lot of folks are just like, that's not going to happen, even regardless of valuation, even regardless of earnings. Now, the way I look at it a little different, right? I'm going to look at it and I think it's a steal deal for the long term, but I can't deny the fact that it makes a lot of sense, right? If you have this fund that still owns a massive amount of shares, let's say they want to sell shares, it's such a massive seller that sometimes it's hard to get any real buying pressure to push the stock price up. And then you add on top of that, a lot of folks are saying, well, also there's another stock that pretty much everybody's down on, right? Let's be quite honest. It's just a question of if people bought in the 30s or the 40s, right? Or even in the high 20s, you're already down 20% or whatever, right? So a lot of folks are looking at that and they're like, this is another stock that a lot of people are going to, tax loss harvest on, right? And sell out of over the next 30 days and go ahead and buy back in like January, right? And a lot of folks are like, why is all of a sudden Corsair going to move up? The stock never moves up, right? So you have a lot of people in that frame of mind, and this is why we're just in this tough moment in the stock market where it's just kind of broken, right? You look at something like a Voyager Digital. This is one of the most exciting stocks I've ever come across in the stock market in terms of potential upside, like realistic potential upside, right? Like ridiculous. But it's an OTC stock, so a lot of folks are like, I don't want to get involved with that. It's an OTC stock. They are talking about getting on the NASDAQ in 2022, which would be massive for the stock. But for right now, at the end of the day, regardless of these ridiculous numbers Voyager puts up quarter in and quarter out and the crazy growth they have in everything, assets under management, amount of customers, amount of transactions going through, all that doesn't matter when you're an OTC stock, because people are like, it's OTC, don't talk to me about it. I'm not interested in it, right? So you have that. At some point in 22, hopefully they get on the NASDAQ, but it's not right now. So a lot of folks are like, I'm not into that one. You look at something like a Visa. Visa's come down massively from $252 to $200 in just, a matter of 5 months, 4 or 5 months. And a lot of folks are looking at that stock and they're like, I don't think I want to touch it, because now also Amazon's talking about getting more and more involved in payments, transactions, things like that. And so anytime Amazon comes after anything, folks get really, really scared. So Visa, MasterCard, a lot of these stocks, even PayPal, a lot of folks are like, oh man, I don't know, right? I was even looking at PayPal. I was looking at Square a little bit as well, but PayPal specifically. And the valuations come down a lot, and it's a lot more intriguing, but we got to kind of see and take into account whatever's going to happen here with Amazon, and what are their plans, what are their realistic, like how high of a probability is it they have success, things like that. And then you run into a situation where some of these stocks are selling off so hard that now you're going to potentially wind up in a situation where folks are going to tax loss harvest on some of these stocks, right? Look at where PayPal's fallen to. Look at Visa, MasterCard, some of these stocks, right? And so now folks are saying, well, these are probably going to continue to sell off in the next 30 days just because all the people that are down on these in all the funds. Remember, this isn't just like, when I say people, don't just think that's like retail investors, like some guy recording in his garage or something like that, okay? No, I'm talking about like funds. Like Visa's a $400+ billion market cap. Like this is big funds are getting devastated on this stock, and a lot of them can consider selling. And so you have a lot of people saying, I don't need to buy Visa right now. I'll get it for $175 in 15 days from now, 30 trading days from now. And I'm not going to say that strategy's wrong or right. It's not something I employ, but I can't deny it. I mean, it's definitely a possibility. You're looking at a stock like Tesla. This has obviously always pretty much been the most controversial stock in the stock market, right? And it's gone on such a parabolic run over the past 2 years that people are looking at that, and you have one side of folks that are saying, buy Tesla at any price because it's going to be a $10 trillion company. On the other side, you have people saying, dude, this is a company trading at a 20+ price to sales ratio. It's trading at 152 forward P. Isn't that kind of insane for a company like Tesla that at the end of the day, the majority of their revenue, high majority of their revenue comes from making vehicles, right? And so that's why Tesla's always the most controversial stock. Also, you have Elon Musk's situation with him potentially selling shares that people are like, I don't know, do I really need to buy Tesla stock at near an all-time high? And, I did a poll on my Instagram. And this was probably about a few days ago or maybe a week ago now. And basically in that poll, I asked folks, like, do they think Tesla's going to continue to skyrocket or is going to crash back down? And it was about a 50-50 poll, which is exactly what I would expect for something like Tesla. About half of people say this baby's about to crash, either in the back half of December or in January. And then you got another half of people say, no, this baby's about to skyrocket. And that's how there's such a huge divergence on the stock, and such a, it's just, people are all over the place when it comes to this one. So you got that situation where people are just like, I don't know if I want to pay near an all-time high for Tesla, right? You have Lemonade stock now at $54, and I'm even looking at this one, but gosh, it's not like it's a cheap valuation on it. You still look at a price to sales ratio on it, which is really the only way you can value Lemonade right now, because their losses are massive and probably going to get even more massive next year. So the only thing you can really value this company on in terms of a metric right now is really like price to sales ratio. And it's still an insane price to sales ratio, even though it's come down a lot. So you have folks like myself looking at this thinking, Lemonade's getting interesting, but gosh, it still has a crazy valuation. And this is another one of those stocks. Everybody who's bought this stock over the past year is down. And most people are down exponentially on this. Like a lot of people were buying this stock when it was $100+ stock. It's 54 today. So the amount of people that are going to do tax loss harvesting in this one is immense, right? And so that is something that could continue to play out for the next 30 days where people are like, it's still got a high valuation and the stock price is probably coming down to $30, $40, if not 20 something dollars because of how many people are likely going to sell out of this stock and go ahead and buy back in the future, right? So you have that whole scenario. You have a stock like Walgreens that trades at a 0.3 price to sales ratio on a 9 forward P. It's, in my opinion, a pretty exciting turnaround play, but this isn't the type of stock that's going to excite investors in the market, right? You can't be in the Tesla, the Shopify, type of market right now, and people are going to get excited about Walgreens. Like no one's getting excited about Walgreens potentially turning their business around in a big way and getting to 5 to 10% revenue growth. That's just not turning on people. So even if you get a cheap valuation stock like a WBA, people are like, so what? They grow revenues 5%. Put me to sleep, right? So that's another factor we have in this market right now, right? You look at a stock like SAM. This stock's come down immensely. I mean, at the peak, this was $1,349 a share. It's $463 today. Woo! And this is a profitable, great business model. Like SAM's like a legit company, right? Not some crazy high tech growth company that no one's ever heard of, right? And so, for a stock to fall like that's immense, but it's another one of those stocks that people are like, dude, it's probably going to sell off more over the next 30 days because people are likely down crazy money on this stock. And so they're going to figure, let's go ahead and take those losses, write those off against gains we've had this year, and then we'll go ahead and buy back in January, February. And so a lot of folks are figuring this stock's going back to $300 range, which is where it was prior to Rona. It's not out of the realm of possibility. It's definitely, possible. I mean, shoot, it's already down to 463. Like to get to 300, that could happen in a matter of a week. Like literally it could be in the 300s in a matter of 5 trading days, right? So that you have a company like Rocket, which seems like it should be a cheap valuation right now at $15 and some change. You look at the P, you look at the forward P, you look at the price to sales ratio, and it's a good business model, but who wants to buy Rocket right now when likely their revenues are going to tank for the next 1 to 2 years? That's just the refinancing, the amount of mortgages, it's just their revenues are going to downtrend for pretty much the next 2 years. And so who wants to get into a stock, even if the valuation has come down a lot, that is in a tough business model for the next 1 to 2 years, right? And so that's what you have with Rocket. And then never mind if we ever had some sort of real dip in real estate, which that's a whole other subject there for Rocket, right? No one's assuming that. Everybody's just assuming we have a softening of refinancing and mortgages in general, which is, I think, pretty much the consensus out there, right? And so you have all that going on, and I want to tell you kind of what I'm up to here, and the way I kind of think about this, okay? But you can see why we're in a very conflicted, kind of broken stock market right now, and why we got big problems, because you're either having to pay literally all-time highs for these stocks, prices, or you're getting in a stock that you think there's going to be a ton of people that basically are about to sell that stock because they're going to take losses to write off against gains, right? And that's going to happen, and people are going to lower their tax bills by doing that, right, over the next 30 days. So you're in a stock market that is pretty much kind of broken right now for especially a lot of retail investors that are looking at it and just saying, I could get a lot of these stocks cheaper at this time next month. And that's fair. That's not really the way I think about it, right? I'm the type of person that I don't care. If the stock's cheap, I'm going to buy the stock, right? I don't go all in one day or something like that because I'm always of the understanding that this stock's probably going to go lower than when I started buying it, right? High probability that days after, weeks after, months after, that stock is a lot lower than when I first started buying it. So that's why I don't go all in one day or something like that. But at the end of the day, if a stock's a good deal, I buy the dang stock, regardless if a bunch of people are going to sell out over the next 30 days and take those losses to write it off against gains and things like that. That's just the way I think. I can't hate on the fact that other people do it, but that's just not the way I do it. I like to stay focused. What stocks do I believe are going to go up exponentially over the next 3, 5, 7 years? I buy those stocks, I hold those stocks. If they go down more, I buy more of those stocks. And that's been my strategy for the last 12 plus years. That's what has worked for me. That will always be what works for me. And that's what I like to do. And so, yeah, I just want to kind of, share that with you guys here in this video, because it is definitely a crazy stock market right now. And I can understand how it can be frustrating for a lot of folks looking, and they're like, great, I got to pay an all-time high for Microsoft, or I have to be in a stock that could potentially, tank another 10, 20% because people are going to sell out of it over the next 30 days and, do the tax loss harvesting. So I understand it, guys. But anyways, this is a type of market where I think, I think this is a good market to learn in right now. I think this is actually a much healthier market to be learning in and buying stocks in than we were in last year. Last year, pretty much at this time, we were in a FOMO market. We were in a market that was just skyrocketing, where you had to feel like you had to invest every dollar as fast as possible. I actually like this type of market a lot better, not just because stocks have come down a lot, but because I think it's a more practical market where you can add stocks and you don't have to just throw all your money in one day, or it's going to be up another 10% tomorrow. And you're like, oh, why did I go all in today? That's not a healthy market. And so I think this is actually, especially for the people that are getting involved this year, I think it's a lot better market than the folks that got involved last year. And it was like a skyrocketing stock market, right? So yeah, hope you guys enjoyed this video as always, and let me know if you're buying any stocks out there. I'd love to hear from you guys as always. Also, we got a massive deal coming for the private stock group, which is gonna drop right around Black Friday. So if you want me to send you that deal, I can send it over to you through email or text. Check out pinned comment down there. Much love as always, and have a great day.